Good morning and welcome back to Almus Market Mornings. Markets are on the edge ahead of tonight's Fed decision. Rates are expected to stay on hold, but updated projections will show how officials are factoring in tariffs, sticky inflation, and yesterday's soft retail sales print. Geopolitics adds another layer of caution. President Trump has demanded Iran's unconditional surrender and hinted its supreme leader could be a target. Comments that lifted oil and firmed the dollar in early trade. Good morning, JK. How much weight will the Fed give to yesterday's weak US retail sales numbers? And do these latest geopolitical threats risk changing the market's rate cut expectations?
Good morning, Swaraj. Definitely, I think the geopolitics is overshadowing the economic data and even Fed meeting also right now, because it's reaching a very almost a boiling point now in the Middle East, and with Trump calling for unconditional surrender, and there are threats that directly they can get involved in the conflict. US, that's a fear. And there are even indications by some experts that US may directly attack the below the ground facility of nuclear facility of US, sorry, Iran, and that can be a big thing that can happen, and therefore markets are very cautious, and the oil price is not coming down, and even the gold is hovering near the highs. In fact, the economic data indicated that retail sales headlines were down, but the details showed that the control group, which includes majorly the consumption part and goes into the calculation of GDP, was better than expected. So the market initial reaction was negative for the dollar, and then again that picked up. The sentiment improved after looking at the details, although industrial production data was weaker. Now, these data are actually additional inputs for the Fed when they're meeting tonight, and follow. I mean, these are following the softer than expected inflation data that we have seen over the last week. Also, we have seen the weekly jobless claims steadily increasing, and we will have one more number tomorrow. The picture for the Fed is one of not a strong economy. Definitely, it's definitely a gradually weakening economy, but still they will have to abstain from. They would abstain from cutting a rate or even getting too dovish, because the impact of tariffs are not yet seen in the inflation numbers. The inflation numbers will definitely get affected after July 9th, when the eventual picture on the tariffs, the rate at which it will be imposed for various countries will emerge. So that we I think even the dot plot this time is going to be not very indicative, or the members will be very uncertain to indicate about the future rate cuts. Although market continues to expect two rate cuts, that will, I don't know if the dot plot will indicate that. Dot plot may actually remain quite conservative and may indicate just one. And of course, the GDP and CPI projections will also be significantly impacted based on what they expect as the impact of the tariffs also. So it's going to be a very interesting meeting in terms of forward-looking, aspect, but not in terms of a decision that will immediately move the market or something like that. So that is the uniqueness of this meeting. We already had one central bank meeting decision yesterday when BoJ kept their rates unchanged at 0.5%, but they indicated that they will be cutting their bond purchases, or rather long-term bond purchases, but this is pushed to the next year, so that there is no immediate market impact because of that. Normally, equity would have strengthened the yen, but then that did not, and therefore, the markets have seen the yen weaken towards 145. Now, also we had the Eurozone ZEW data, which was much better than expected, adding to some good indicators from Europe, and giving rise to the expectation that euro will be an attractive destination for investors. Yes, of course, if you look at the dollar's reaction after all this, dollar has strengthened for two reasons. One, we have been pointing out, even detailedly mentioned in my macro report, that dollar is now quite oversold, and there are indications in the charts that it's holding key support on a monthly and weekly basis, which can see a rebound after having fallen 13 to 14% from the highs after the new Trump administration took over, and also digesting various negatives like tariff and geopolitics, and also the policies of the new government. Although the structural issues of debt and deficit are not going to go away, and they will continue to haunt, but at least in the short term, I think the dollar is getting a bid. Two reasons I am putting. One, there are some investors who are now trying to buy back some of the US assets. It's been sold massively in the last few months, and particularly the Japanese investors are looking to buy US assets, and those countries where the yields are low, they are also looking to buy. That is one. Secondly, the intensifying Gulf War has somewhat given safe haven status to the dollar as well. I mean, for quite some time now, we have been talking about dollars losing its safe haven status, and euro and gold have been treated as the havens. But I think some amount of reinvestment into USD as a safe haven in times of such huge geopolitical development is quite justified. So that's the reason why we have seen, despite all the negatives that you would see from the data and positive from the European data, we've seen the dollar strengthen yesterday by about 0.8%, falling from near about 1.16 to 1 point below just 1.15, and this can have some extension in the coming days because short-term market looks a bit overbought in the dollar, oversold in the dollar. That can, the position adjustment can lead, and of course today's session should not see much of a movement in the dollar because we are into the Fed meeting and more data ahead. And tomorrow is also a holiday for US. So some of these data, like jobless claims, will be announced today itself. So market will look for these numbers, and therefore much movement may not be seen. Of course, Asian markets are quite different. We are seeing some currencies stronger, some currencies weaker. Taiwanese dollar is again strengthened, but the Korean won has weakened. Indian rupee, particularly yesterday, saw a fresh weakness after initially strengthening to 85.90, but as it held, and as that level provoked some buying from PSU banks, I think a lot of other banks also joined in the buying, and we pushed above 85, 86.20. That has been holding for some time, and now we are market. I mean, offshore market shows trading above 86.30 also. So I think oil price not coming down, and general recovery in the dollar, Fed decision, and tariff uncertainty, all these things are currently influencing the rupee movements, notwithstanding the domestic macros, which have been improving, including the latest trade data that showed a lower deficit. So USD-INR can move further up along with the dollar index towards 86.50 or 86.75. Not seeing anything beyond that right now, in my reading. So those are the levels where exporters might be, getting tempted to, hedge themselves, although premiums remain somewhat unattractive. So all in all, dollar looks a bit strong in the short term. We'll wait for key Fed decision and also the UK rate decision tomorrow. Thank you.
Thank you, JK. And of course, today we need to look at Fed, the dot plot that will be released. Along with that, just a quick update: Bank of Japan yesterday kept the rates unchanged. They indicated that they would reduce their long-term bond purchases, but it would happen next year, not this year. And the yen weekend post 145, past 145. Dollar strengthened overnight. We have seen in the past few months dollar being continuously sold. So in the intensifying Gulf War is seeing some reinvestment in USD. Just a reminder that US asset market remains one of the most liquid markets there is, so it's natural at some point some saving starts trickling back into the US markets. Rupee saw some fresh weakness yesterday. Initially, there was strength, but the general recovery in dollar and the higher oil prices is inviting some sort of a dollar buying. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.